Hey guys, I'm Steve and welcome back to the channel where we talk about the joys of stock market investing and long-term dividend gain. If you're stopping by the channel for the first time, do me a favor and hit that subscribe button. You won't regret it. And if you're a returning viewer, welcome back. Guys, today I want to talk a little bit about self-sabotage and some of the things we do relating to how we mess up money in our own portfolios, and sometimes it makes us give up or it just takes us out of the market, period. Without further ado, I'm going to jump a little bit into it. First thing is, I think a lot of mistakes investors make is they do impulse investing. And what do I mean by when I say impulse investing? Buying stock with your last dollar. You know, a lot of people tell you, you'll hear a lot of people telling you, oh, well, you need to buy this stock, you need to buy that stock. Or, stock market investing is easy, but a lot of people don't tell you should have a budget set aside to make your investments. You don't make money with your last dollar, because especially when you're putting money in the market, unless you're doing some type of options trade or something like that, where you're doing short-term investment, money doesn't flip over that fast in the market. It's a waiting game. It's a patience game. It's one of those things where a lot of people have knocked themselves out of it because they didn't understand how the market works and how investing is more of a long-term play for most investors that are trying, get to that road of financial independence and freedom. Because you got to remember, you got to make the money grow. That's one thing. Investing with your last. If you got $300 in the bank and its stock is like $280, you're like, you know what, I'm gonna jump into the market. It doesn't make sense to do that because you're gonna wind up needing money. If that's the last you got in the bank, making that investment, what you gonna do with $20? So it's up for debate, but I mean, highly unfavorable to do something like that because it usually ends bad in the end, guys. Another thing is, and this is a big one, being an emotional investor. What I mean by being an emotional investor, somebody that deals with like the FOMO syndrome, and you guys just seen that, with a lot of people jumping on with what Ryan Cohen did with Bed Bath and Beyond, and then the thing with GameStop, and people got caught up in that, investing in businesses that they have uncertain futures, especially Bed Bath and Beyond. Nobody knows what's going to happen, and it's like it's taking a turn for the worse. So you want to avoid the fear of messing out and dealing with stocks where you don't even know why you're investing in it, or investing in something that somebody else, is doing, and you following suit. Another thing about being an emotional investor, selling the stock out of anger or frustration, and especially frustration. People buy stocks, like me. I learned at an early age of stock market investing. When I was early into it, the money doesn't move that quick, and you have to leave your money in your portfolio and have it to where it returns over time. I would get a stock, and then a lot of people don't know, most of the major big name stocks, they're more steady stocks. The best stocks are called boring stocks. These are stocks that, they go up and down as the market goes up and down, in the 52-week period. But in slow incremental moves, these stocks are going up year after year. But you don't, unless you're watching it every day, it's like watching paint dry. But you're looking in, and a few months later, you look back and you made some gains. And a lot of people can't stomach that. A lot of people have to want things fast. And if you want something fast and you want to jump into it, sometime in the market, you got to reconsider whether you want to be an investor or not. And a lot of people run into that, and they don't know. That's one of the things they don't know about. And, it results in them either selling out of their positions or just giving up in investing, period. It's a patience game. Another thing, getting spooked by volatility, especially like times like now, where the market would be green in the morning and then red a couple hours later and then just continue dropping. Or you might just have consecutive weeks of it just in the red. A lot of people can't stomach that. They put their money in and it's going down and going down, and like A lot of investors, especially new investors, they start to second guess themselves of, hey, was this the right stock for me to pick? But you got to understand something. You're not the only investor going through that, and this is a normal occurrence. You know, the market goes up and down. Nobody control it. It's just how it is. And it goes back into, you know, like I said earlier, with spending your last, you know, spending money that you don't have. So it's like a combination of things. Like, you know, people get scared when they see the market going up and down. But I mean, if you're doing your due diligence and you're doing what you're supposed to do, and you study the market, you know it can't be timed. So things like this happen. What do? You calm yourself down, pace yourself, don't even look at it, and keep adding into it, and it eventually turn around, and so will your returns. You know, another thing. Let me see. Following the latest stock trends. That goes back with the FOMO syndrome, but following the latest stock trends and tips. People always say, hey, I got a new stock I'm thinking about, or hey, you want to put your money into this stock, or, you know, everybody wants to look like a guru or sound like they know everything, and in reality, nobody knows anything. You know, you have people that, you know, when people had these big gains, or they're like, oh, I made this off of Tesla, or I made that off of it, they're lucky. These people are lucky. You know, opportunity meets preparedness. You know, anybody can get lucky on the stock at any given time. You know, people telling you, hey, if you want to, like a lot of these infomercials, you want to get into stock market investing and make 220% returns a year, or you want to beat the S&P 500 and come back with 30% return a year, invest in my program, or do this. You got to avoid stuff like that, guys, because these get-rich schemes, you can't have a get-rich scheme on something that's unpredictable. It's impossible. It's like a lot of people with gambling. Hey, how to beat the roulette wheel and how to pick any number, you know, without watching the ball roll and seeing the dealer. Impossible. So you got to be smart when it comes to investing, you know, and that's why it makes more sense for the common investor to just really know why you invested and stick with your plan. Everybody's investment road is different, you know, and yours is unique to you. Let me see what else. You could sabotage your portfolio. Like I mentioned earlier, trying to time the market. That's one thing, you cannot time the market. Stocks go up or down at any given week, month, or year. So you stick with the basics. You buy your stock, feel good about why you bought the stock, have an end game, you know, where you're trying to go in a few years. You're buying the stock to hold, and you're being unwavered no matter what the market does, because you know that you put your money in a bona fide quality company, and that's the best decision you can make. Another thing, like I said, trying to time the market, listening to talking heads, that will really get you messed up. That goes back to listening to stock tips and stuff like that. When I first started getting into investing, I learned a good part of how to invest and how, you know, certain aspects of the market move by looking at various YouTubes. And they had some very good information, and it helped me along the lines of me learning about investing. And that's what sparked me to do this YouTube channel, because with my experience of being a regular guy and jumping in with only $60 7 years ago, and then having my portfolios grow to what they are now, with my understanding of how the market works and learning patience and steadiness, I figured I would share it with you guys, because I mean, I really enjoy it. And I know there are people out there just like me that are uncertain of whether they wanted to get into the market or not, and they can be sitting in the same place I am 3, 4, 5 years from now. So it's just good that I tell my part and a little bit of knowledge of what I've learned along the way. Getting back to the talking heads though, I learned a lot about stuff on YouTube, and I also learned a lot about stocks on places like CNBC. Now, the thing with seeing stuff on TV, a lot of people can get caught up in watching something on TV and then taking it for face value and thinking it's true. But I learned something. When the pandemic hit, the market fell real quick in a matter of days. And I stayed glued to the TV the whole time the market was open because I've never experienced any type of drop like that. Now, once I seen that drop, I said something in my mind. I said, I'm going to see what they're saying they're going to do. And you get a lot of people on there. You know, I don't want to say no names or anything, but you get a lot of people on there and they're like, oh, well, I'm going to sell everything. Or, oh, man, this thing, we don't know when this thing is going to end. And it's like they're spreading fear and hysteria. And like, you know, a lot of retail investors are jumping out of the stock market because, you know, we already hit with a pandemic. And then people are liking this to the Black Plague. And come on, you know what I mean? And I just stood pat and I watched. And the thing that was funny is they were telling you to sell everything, but you never heard them sit up there and document when they were going to sell, what they were going to sell. And the thing that's funny, I happened to be watching it last week. I can't remember what day it was. And the guy was talking about a stock, about how he would sell the stock and get rid of the stock. And, you know, but then it looked and showed he was holding the stock. Because like sometimes they'll be talking to show what they own in their portfolios and what they don't own as far as the subject they're talking about. And he's talking about, if I had the stock, I'd sell. I'm like, you got the stock right there. The ticker symbol's right there. And then I just figured, you know, it's just entertainment. You got to remember, even though it's a money show, it's still media. And if they don't have anything to talk about, you know, as far as earnings calls or some type of move that is making a drastic shift in the market or not, a lot of people are just like, you know, they have to think of things to talk about or just go what's on the teleprompter and make it to the next commercial. So a lot of the stuff they talk about is just banter. But, you know, you got to know how to separate the real from the unreal, you know, especially when it's dealing with stocks that you own yourself. It's no way you own a stock for 4 or 5 years and it's been producing for you. The earnings have been doing well. You've learned about the stock. You become sort of a fan of the stock, you know, well, not emotionally, but like, you know, you see what the stock is working. It's working for you. And then you hear somebody on TV say, oh, man, they're predicting that the stock is going to fall 15% in the next quarter. It doesn't look like it's going to be a good quarter. And then all of a sudden, let me get out of this and keep the money I have. With the greed. Don't worry about that. Like Warren Buffett said, be greedy when others are fearful and be fearful when others are greedy, thus eliminating the FOMO syndrome. Then, you know, the last thing I'm going to talk about, guys, you know, before I wrap this up is unintentionally investing, short term. And when I say unintentionally is, it goes back to the first point. When I said, you know, impulse investing, buying something and then you got to sell back out of it because you need money to do something else, poor planning. And, you know, basically unintentional investing, you know, short term, you're selling too quick. Early in my investing career, I had found out about NVIDIA. NVIDIA was like, this is when like the chips, like, especially like CNBC, it was like a chip war. They were like, oh, which is the best chip maker? Taiwan Semiconductor, Micron, NVIDIA's, you know, that's when they start really blowing up on about NVIDIA. So I jumped into NVIDIA at $108 a share, right? It's a little bit when Trump was getting elected, right around that time. Man, that stock took off. It got all the way up to like $140, I think, 36, 130, and like, you know, I'm a new investor, and I brought a significant stake in that, and I'm looking like, man, NVIDIA is making all this money, and I'm looking at my portfolio every day going up like hundreds of dollars, you know, with my other, you know, stocks, of course, and I'm like, man, I'll be rich quick. I never knew, you know, I was learning as I went. They said something bad about NVIDIA on TV, and it had lost 4% that day. They were talking about, oh man, you know, there's new developments with NVIDIA, and a lot of people are like, oh, well, the stock is overhyped anyway, and you know, and I'm listening to them. I'm like, oh, I made a mistake. I don't want to lose my money. You know, the first rule of investing is not to lose money. I sell out of it. As soon as I sell out of it, skyrockets and takes off, and I kick myself. I kicked myself like, man, why was I being... And then the thing is funny, they made that statement. It was on a Friday I sold it. I'll never forget it. I sold it on a Friday. That Monday, NVIDIA took off. And the same people that was like, oh man, I wouldn't own NVIDIA. You know, I'd be skeptical about buying it and going into it. I was a new investor and all of this stuff. Monday, it took off. By Wednesday, everybody was like, yeah, NVIDIA is my top trader today and all. And I'm like, you can't win. And I had to learn, you know, from talking to a lot of people that invest, a lot of my clients who are well off. And they had explained to me like, you know, Steve, look, you can't just go and listen to what somebody else says. You get a stock, you pick the stock, feel good about it. You say to yourself, hey, I'm gonna hold this stock 5, 6, 7 years or whatever, a lifetime. If the stock is a blue chip stock and I grew up using it and it ain't going nowhere, set it and forget it. That's what they told me. And like, you know, over time, you know, it really sunk in, and they could never be more correct. So basically, with the things I named, guys, you know, we sabotage ourselves. You know, letting outside interference mess us up in investing and things like that. Everybody's journey is different, like I said, and your journey is your journey. Set the stock, forget it, you'll be all right. Avoid the things we talked about today, you know, and have self-confidence, have patience. Remember, it's a marathon, not a sprint, and you'll definitely be all right. But as usual, guys, I appreciate you spending the time with me, man, hearing me out. Drop me some comments, guys. Let me know what's going on. If you ever sabotaged your stories, you know, sabotage your portfolio, and we can all laugh about it. But, you know, as long as you get something from the channel, you get something from what I said, man, hit the subscribe button, like, share, get the content out to other people, spread the word, continue to grow the channel. You guys have been very good with the subscriptions, and I appreciate everything you guys have done. And as always, I'll see you guys in the next video. Take care. Have a good night.